Hello and welcome to ATFX's US Core PCE Price Index data preview. Bit of a mouthful, I know, but massive for the markets this week. As always, we can't look at some of this key data that's coming out with the US without having a quick look back at what's gone on in the last few days and, in fact, what's happening now for some of us in the markets. So first up, I think we have to take into consideration the events that occurred at Jackson Hole. Of course, that's the speech that we got from Jerome Powell. He came off to the initial market reaction was that he was a bit more dovish, and it kind of all but locked in a September rate cut. That's been reviewed in the last few days as we move through this trading week. We saw a little bit of a sell-off in stocks overnight, and Treasuries came back, and expectations for that rate cut in September now sit around 85%. They were about above 90% after the speech from Jackson Hole. But we have got this huge inflation data coming at the end of the week. Investors are concerned about it. And if, as some anticipate, it comes in a little bit hotter than expected, it could really change those rate cut expectations, and we could see some massive moves in the market. So what we're going to look at today, we're going to look at where those numbers could come in, and then just go through a couple of the major products that we see most of our clients trading. So we're going to look at gold, we're going to look at euro, we're going to look at dollar yen to see some big moves, and there are some nice technical setups in the market for them. So first of all, let's have a quick look at the data and the expectations that we're going to get. So month on month, expectation is for another 0.3% increase. Now that's been in line as to my limited memory at the moment. The last few times I've done these, in the last few months that we've looked at this, it's been that 0.3, and they've been coming out sort of fairly consistently. The other number we're looking at is that year on year, and that came in about 2.8%, and there are some expecting a 2.9% increase. Now, that is not what the Fed wants to see, and certainly not what any doves, including those currently roosting in the White House, they don't want to see that number either, because it really will pull back on those rate cut expectations. In all honesty, we probably will see the markets pricing in. Most people are expecting it. We probably will see this 25 basis point cut in September. The question for a lot of people moving forward, how much of that is priced into the market, certainly in currencies and against some of the bigger commodities like gold? And how many more cuts are we going to get? And that's probably the big question. How many more cuts are we going to get in 2025? And how many are we going to get early in 2026? If this inflation stays sticky and you've got an FOMC that is concerned that tariff inflation is going to hit the US economy, then we could see a real pullback in those rate cut expectations and some big moves in the market. So headline number will be that plus 0.3%. Anywhere, even with this one, a 0.1% change in that will see the market move, and it will see the market move fairly hard, I should say. The other is that year-on-year number. If it does come in close to that 3%, well away, the Fed wants it back down near 2%, then we could see some sharp moves, and it could be the dollar moving up. Obviously, conversely, we see it coming a lot weaker. It's going to lock in that September rate cut, but also it's going to bring in expectations of another rate cut in 2025 and possible further ones coming early in 2026, which would see the dollar depreciate against currencies, especially if we're looking at the euro. Yen in particular, interest rate differentials, very interesting there, very compelling argument for a good move, and of course gold. So without any further ado, I'll just take us across and we'll have a quick look at some of the currencies. So I've kicked off with the euro chart. This is the daily chart. You'd be very familiar with this if you've been watching a few of our podcasts and updates. Euro's sitting very nicely, and it's squeezing into that range, as you can see in this kind of triangular formation or flag. We're just sitting towards the lower end of it. The dollar has been a little bit whippy over the last few days, as we know. Moved back down was that dollar acceleration after Jerome Powell's speech. We're sitting here, support now coming in. Where we're looking around 115.50 on that trend line support. Take it a couple of days along for the PCE number. If we do get a stronger number, expect these levels around 115.80 to be challenged. A break opens the way for a move down to these 114, these previous levels. A bigger break could see us all the way back down, heading for these 110 levels. That's the 200-day moving average. Conversely, of course, weaker number comes in like 0.1, 0 even. We're going to challenge those highs up near 118. Initially, we're going to go for these 117.30s, recent highs. Trendline resistance, 118.80. Previous high we've got up at 118.29. On that year-on-year number as well, that would come with, say, a 2.7, a 2.6 certainly. Keep an eye on these moves. We'll go and have a quick look at our dollar-yen chart now, and we'll round it out with gold. Okay, here's the dollar-yen chart. That has been very whippy recently as well. You can see these moves, but kind of keeping, as for dollar-yen, in a relatively tight range. Tight, I'm talking 146, 148.50, so 250 points, but big moves. We're not close to too many technical levels here at the moment. We're sitting bang in the middle of the range. But if we do get a big moves, if we get that 0.1, that's going to be dollar selling. We're probably going to come back and we'll probably take out these lows around about 146. Higher number, 0.5, 0.6, even the 0.4 will probably challenge 200-day moving average, I should say, currently around 149. And then trendline resistance now coming in below 150. Obviously, 150 is going to be a big psych level as well. Lower down than that, if we do get a real move and we do start to see lots more rate cuts being priced in, long-term support down around 143, the figure. Just over to gold now, and we'll close up. Here's that longer-term daily chart for gold. And as you can see, also similar to kind of euro, we're seeing this squeezing flag pattern. We're coming into tighter ranges. And as we do this, traders are expecting to maybe see a bit of a break. So where we're going to get these breaks, top side, weaker numbers, selling of euro up at what, 34.10, previous highs then above there 34.40, and of course we've got that all-time high up at 35.00.05. Don't forget that stronger number. That's probably where we're going to see some challenges coming in. 33.31, only $40 away, not too far in gold. We know how hard it can move. And then these previous lows down around 33, the figure that could come in. Obviously we've been on that to move gold lower, we need the higher number. So we're going to be looking for something 3% on the year plus 0.4, 0.5, 0.6 on the month-on-month numbers. That could really see these moves accelerate. Fantastic trading opportunity coming up. Once again, it's at the end of the week. It's in that New York session. We get it just at the start of that New York session, but liquidity starts to fall away. So even if we get a sharp move on the first hit, the impact, sometimes you then see longer term investors piling in after in thinner liquidity. And that's when those moves can really accelerate into the weekend. So good luck with your trading. If you need anything from us at ATFX, please let us know. And thanks very much for tuning in. Cheers.